So here we are, we're running down just before noon. Now I'm going to propose something super controversial in the next part as we go into the PM session study. Hey trader. Okay, so we're going to talk through the FOMC market analysis for today, and I was so excited to put this one together. Honestly, I haven't done an AM journal entry in a minute, but this was too good to not put in a journal entry. So let's jump into it. So today I want to go over profile pairing. I want to reinforce range concepts for the journal, invalidating weekly profiles using pre-New York profiles and merging them with intraday profiles, and then reinforce inefficiencies and runs. So let's jump into full screen mode. Alright, so these profiles are taken from ICT month 8, and in month 8 he's talking about Forex pairs using the Asian range, talking about the London Open, giving a schematic of price, and merging this concept with ranges is what's going to be meaningful for an AM session. So I'm not a London session trader, but I'll use the price range created in London, and I'll use some balanced price range concepts paired up with intraday profiles. And we're taking all of this down from the higher time frame, but framing it around Asia's range into London's range, and then to get into the FOMC day. So off the hop, I want to just talk through first off what to anticipate with this profile. So we would be looking for a consolidation in Asia. We may see a rundown below Asia's lows, but that's not necessary. What's most important is that at around 2 o'clock, we're starting to see an aggressive run up to take some highs. Those highs will be followed by consecutive runs down at least until noon. Now, this is just a schematic, right? Like the magic is in the price action. And what I focus on for my AM model is this small gap in price. What is going on in this small gap in price using London's range before the New York bell, waiting until the opening range presents itself, and then capitalizing on something in here to take that move down to close off the London Open and get to about 11 o'clock, 11:45. So AM session will end around anywhere between 11:30 and noon. That's the end of the AM session, which is also tied into the London close. So what we'd anticipate with this normal London protraction is a run above Asia and then a lower high before breaking Asia's low. So pretty evident here, we've got the Asian range. This is 2 o'clock. At 2 o'clock, we may see a dip down, but after 2, we're looking for an aggressive run to take Asia's highs. I'm not using all of this. I'm framing, I'm not trying to trade this. I'm trying to frame this for New York, the AM session. So to validate that this profile is legit, I'm expecting in this gap between London and New York, some price run below Asia's lows. So what we have is Asia's lows, and we see here at 8:30 a run below Asia's lows. Now this small little price leg here, I'm expecting a leg back up to retrace somewhere into this bearish leg before continuing bearish. Now the intraday profile is going to come in somewhere here, so I don't want to lose sight of that. Instead, I'm going to take something from ICT's 2022 mentorship, take that 8:30 range, which lines up perfectly with what I'm trying to use for an AM model, and set the London range. What are the previous swing high and swing low? Additional to that, I'm pairing that with the weekly profile. Now, ICT has said 70% of the time, Tuesday will make a higher low of the week. If I were looking for something to be bullish, that means Tuesday's low would stay intact while price shifts bullish. Tuesday's low would need to stay intact for it to remain a Tuesday low. If Tuesday's low gets broken, then that means it's no longer a Tuesday low. So if today is Wednesday and Wednesday goes below Tuesday's low in any meaningful way, then it's clearly no longer a Tuesday low. Check. So we have here 8:30. We set our ranges. So this is episode 5 from the 2022 mentorship. I am using every fair value gap between 2 and 5 on the London leg as a reference point going into the AM session for New York. And if I see a range break, that becomes meaningful as a level of inversion or protection. Said simply, if price were to break London's high in a meaningful way, so not stab above and come back in, then I would use any fair value gap as a retrace to go bullish. If price fails to go above London's high, then I would be looking at that area as a level of resistance for price to go lower. So here we have price at 8:30 chopping below Asia's low and also going below Tuesday's low. So going below Tuesday's low is meaningful because again, that would invalidate a Tuesday low profile. But this consolidation and reversal back into the range is not really enough. So I'm waiting for the 9:30 open. 9:30 to 10 is information gathering time. It's not trading time for me. So between 9:30 and 10, what I see is an aggressive run up, not clearing the London range high. So clue number 1, price is modeling a London normal protraction bearish profile. A run up, so after 2 o'clock, an aggressive run up, and I start to see a slide down. Second clue, price has broken below the Asia low. Third clue, price has broken below the Tuesday low. So I'm waiting. 9:30 to 10, I get some information. I see that we create a new price leg. This price leg at 10 o'clock is the one that I'm more interested in. I see that we are staying consolidated, but within this fair value gap projected from London, I'm watching. If I don't see enough structural breaks, then I know that the 9:30 to 10 is not a trading range. I'm invalidating anything from 9:30 to 10. And let's just call that a form of distortion in itself. So as price chops through all of the AM session, very little activity to work on here. If anybody was looking at this as a breaker, the reason why this would be, in my mind, not something interesting is because we did not go above the London range high with any meaningful power. So all of this is working off of the previous range and simply rebalancing and repricing. So once the consolidation kicks off, I'm keeping my eyes trained on here and I'm waiting for the AM session close. So 11:30 to 11:45 is going to tell the most meaningful story about the AM session. I'm not above the London range high. I can't be long as yet. I've broken Tuesday's low. I'm suspicious of any longs anyway. And I'm seeing that the schematic of a London protraction is working itself out. So I'm expecting in New York to see some sort of push up and then push down. So let's move ahead. So in 11:30 to 11:45, let me see if I can do this right. I'm gonna go down to the 1 minute and scale all the way back here. So 11:30 to 11:45, which would be 11:30, 11:45. So in this segment of price, I'm watching to see if there is any meaningful breaks or fair value gaps that I can use. Now this is enough for me. For me, staying below London's high and looking for any breaks in structure, this would be enough for me to look for something and a stop above the London range high, because at that point, if you go above that high, more than likely you'd be offside. But here is the first opportunity in that last hour of the AM session where price starts to break down again, retest the fair value gap, and goes down. Now that wasn't my trade, but it was enough information for me to move on to the next step of this puzzle. Get our bearings back here. Move on to the next step of this puzzle, which is maybe the AM session isn't really what we want to be working with. Why? Well, it's FOMC day. FOMC we know is a two-stage move. So we're gathering information through the entire AM session. That could have been a trade. It was I took something off of this range, not that one, and that we got an AM low, looking for a target below the morning lows. So if we had a run below Tuesday's low once, then certainly by this point of the AM session, Tuesday's low is in the dust. Now we have eliminated at least 3 profiles. It's not a Monday low, it's not a Tuesday low, so now it could either be a Wednesday or a Thursday low. Wednesday lows are possible, Thursday lows are more likely. So if this wasn't enough, going below Tuesday's low, now we're definitely not thinking bullish. We're not thinking bullish because it is more likely to be a a Thursday low, and it's now impossible for it to be a Tuesday low because Tuesday's low has been broken. The schematic in mind is that we're looking for consecutive runs down until the London close, which is just before noon. So here we are, we're running down just before noon. Now I'm going to propose something super controversial in the next part as we go into the PM session study. So from the AM Asian range, we see the run up, London protraction, we see a break of Tuesday, we're thinking bearish. We wait, 9:30 to 10, we wait. We don't see a break above London, no clues that this is going to be bullish. Even with this aggressive run up, without breaking above London's high, I mean, it's not enough info. Wait, AM session runs through, we actually see a consecutive run down bearish. Bearish takes the previous London low, it takes Asia's low, it takes Tuesday's low. We're waiting now to see a PM profile. Now on an FOMC day, I propose that lunch moves from 12 to 1 and the macro will deliver from 1 to 2. Anybody who's interested in trading FOMC, trading the news, might go away from their desk from 1 and come back at 2. I propose, and I know this may be controversial, they're not going to go away from 12 to 1, sit for an hour and wait until the news. They're going to be fresh, they're going to come back, they're going to come back at 2. So on days like this, I shift my lunch macro to 1 to 2. So let's look at this intraday profile first. What we're anticipating is there's 6 profiles. This is from month 10 in ICT's content. There's 6 profiles. 3 of them start with an AM bearish, 3 of them start with an AM bullish. And, you know, without just giving away all of my study notes in one journal entry, looking at this profile, the one that is bearish, I'm anticipating looking for a PM setup. And when I see an SMT on the lows, I would expect a run up with looking at this leg to time with this time of day. Now this is one of the only profiles that has a rely on time of day and question marks. It could go either way. This and one other profile has question marks. This time of day is right in the middle of the PM session. That's 2:30. FOMC is a 2-stage move, 2 o'clock and then 2:30. This profile has a bearish AM. I've got a bearish AM. This is most likely the profile I wanted to be watching anyway. But let's take a look at some of the price action clues that gave it away. So we need an SMT on the lows to conduct a bullish run up, knowing that 2:30 could probably pull some shenanigans. So we'd be expecting some sort of run below the lunchtime lows and below the AM lows. So in this model, we're going below the AM lows and below the lunchtime lows. Now I'm proposing that this is no longer the lunch, but this is the lunch, and the SMT would be evident if this were true. So here's our SMT on the lows coming out of lunch, SMT on the lows coming out of lunch. Now I'm saying that this is the new lunch hour. If we had taken the previous hour, there would be no SMT on the lows. So I'm holding firm to this. I think as much as it might be controversial, on an FOMC day or any 2 p.m. news event day, lunch will shift and it won't be a macro between 12 and 1, but a macro between 1 and 2. The other thing we see is that FOMC, understanding from ICT's teachings, that it's a two-stage move. So at 2 o'clock, I see a sweep and a bullish run, and I'm expecting at 2:30 the opposite to happen. So with that in mind, and this profile in mind, and coming from my AM session bearish with a London range high defended and an AM bearish, everything is pointing and screaming at me to say we're going to have a bearish PM. So I'm using the 15-minute. And here on the 15-minute, we have a fair value gap inside this very consecutive run. We've broken several sell sides, 1, 2, and we're retracing up. Now, the other thing that starts to supercharge this, which is just, it's been in plain sight on the chart, but I want to bring its attention. Not only do we have this old low splitting a fair value gap here, but we also have the final pieces of the new day gap. And the new day gap for me is a confirmation of direction, of bias. So I'm going to highlight that, go back down to the 5-minute, and here we see after shifting the lunch, so I'm going to take that off, we see when does price actually reach into that 15-minute gap, into that old low on the 15-minute, and to the top of the new day gap. Literally right at 2:30, exactly when you would expect it on a AM decline, PM reversal, question mark, because it could have been reversal bearish or bullish, right? So it's a bullish run to reverse bearish, or it could have been a bearish AM to reverse bullish. So 2:30 triggers. We reject off the new day gap, we go into the 15-minute fair value gap, we go into the old low on the 15-minute. We start breaking below the new day gap. We give one more test on the new day gap coming into the PM session, 2:45. So everything here on this leg, we're looking at as an inversion. So let me just be more specific on what I did there. So on this leg up, the temptation might be to be bullish because we had a sweep of the low and we're breaking above this high. But taking the context of what we had in London, what we had in the AM, the intraday profile, shifted lunch, the 15-minute, the new day gap, on and on and on. This is just, it's like a bait and switch. Everything that happened here is going to be inverted on the way down. So what I mean by that is this fair value gap. Once we cross the 50%, that 50% here becomes an inversion. So as soon as price clears below that 50%, that's an opportunity to go short. We see the retest on the bullish candle here. Price goes down. This order block, 50%. Once we cross the 50%, break it, retest it, push down. 50% of this order block did not get tested, but the fair value gap did. This is a 5-minute fair value gap way back that got broken, retested, and went back down. But this was the nearest H1 sell side liquidity, right? So using the projected range, I would take the preceding swing, and I'll be looking for the deviation, first deviation below the projected swing. That becomes my projected target. We see we've got a 2-stage delivery, and the time that it delivers is 3:55's closing candle to 4 o'clock, right on time to end the PM session. So like I said, I thought this was just such a good journal entry. Read this price action very well, got the short on the AM, took some profit down here, closed that position, got the secondary short here under touch of the new day gap, broke it down, closed it right in the body of this candle. I didn't want to test my luck with any shenanigans going into 3:30. So as we're inching closer to this H1 sell side, had the projection marked out, decided not to push my luck, took my profits, and see prices just chasing towards that daily sell side further down. So thought this was a good journal entry. Wanted to put it into words and be able to look back at this to reinforce my understanding of it, and hopefully you enjoyed. We'll do it again.